Ayhan, talk to us about what is happening in terms of a two-speed global economy right now.
So there is a serious slowdown underway. You already gave the numbers. Last year, we had remarkable growth, 5.5%. This year, we see 4.1, and next year, 3.2. Is this a big surprise? No, because the last year rebound was supported by significant policies, accommodation, of course, pent-up demand. That pent-up demand is now dissipating, and policy support is withdrawn. As you said, there is a two-track recovery in the sense that, yes, both advanced economies and emerging market and developing economies are slowing down. But when you look at advanced economies, they are still flying high. By the end of 2023, all of these economies are going to go back to their pre-crisis trend output levels. When you look at emerging market developing economies, they are going to be 4% below what they had prior to the pandemic trend level of output.
Ayhan, can you talk a little bit about some of the debt levels out there? We saw a lot of nations, of course, for very valid reasons, had to increase their debt loads here. We also saw at the consumer and the household levels interesting trends as well with regards to debt. How is that factoring into your forecast?
Even before the pandemic, we saw a significant debt wave taking place. In fact, if we had this conversation in 2019, probably we will talk about the next crisis coming along because of the debt problem. With the pandemic, we saw the single largest increase in 1 year in debt in 2020. That was necessary to provide the support, the economies, fiscal accommodation was there. But because of these high debt levels, high deficit levels, what we see around the world, that support is now being withdrawn. Governments are trying to improve their balance sheets. With that, of course, you have the slowdown underway. This is creating challenges. If we see a faster than expected tightening of monetary policy, especially in the United States, we might see some countries having difficulties in rolling over their elevated debt levels.
Do you see bigger proportions of revenue go to servicing those debts? As you have seen, of course, maybe countries who aren't able to lock in those low rates, and of course, some of those debt levels and servicing those debt levels continue to rise. How much of a burden is that going to be?
Now, when you look at especially low-income developing economies, their debt levels are elevated. Some of them are already in debt distress. And I'm happy that you asked that question because this is something global community needs to address and needs to address quickly. The debt challenges in low-income countries. These countries cannot allocate the financing necessary for health and education while dealing with still an unfolding health crisis. So it's going to be important moving forward. We have a robust resolution system to address debt challenges in low-income countries.
Okay, so there needs to be sort of the support, maybe fiscal support of some tune globally to help some of these emerging markets. I'm interested in some of what you feel to be deep uncertainty. That's certainly what has been voiced by the World Bank in general going forward. Exceptional uncertainty is what your global president has been talking about, David Malpass. Is any of that clearing when we hear conversation coming from Fed Chair Powell, for example? How much of the uncertainty is wrapped around where monetary policy goes, or are you really talking about a health crisis uncertainty?
Of course, that exceptional uncertainty has multiple dimensions. I think 3 months ago, we were thinking that we were going to overcome the pandemic. Now we are dealing with a type of wave we have never seen before with Omicron. And 6 months ago, we thought that inflation was going to be transitory. We are thinking now inflation is going to be more persistent. We basically revised our expectations when it comes to normalization of monetary policy. And you still have supply disruptions out there. You still have challenges associated with debt issues we discussed. And then you can never underestimate the challenges associated with climate change and the climate-related disaster. So we are going through a slowdown while we are trying to normalize policies around the world. We are withdrawing the support. And these types of transitional periods have always been challenging, but full of uncertainty. When you look at emerging market developing economies, they are flying low, as I mentioned, and they don't have much gas left in the tank in terms of policy space if they encounter additional headwinds. So we have the risk of hard landing ahead of us if some of these vulnerabilities turn into serious threats.
So prior to the pandemic, Ayhan, one of the links that we saw between the developed world and the developing world was, of course, that global supply chain. There was an interconnectedness that we had in our global economy that, for all intents and purposes, broke down during the pandemic. Do we go back to a global supply chain that was reminiscent of the pre-pandemic era, or are we headed towards something that looks a lot different?
Early in the pandemic, supply chains were remarkably resilient. Of course, with the kind of the waves around the world, we saw a lot of disruptions. But there is the supply side of that story. There's also demand side. We saw this remarkable demand accumulation, the pent-up demand last year, that put additional pressure. The hope is that supply chains are going to remain intact, even strengthened. We will have a better understanding of how to manage these, disruption in supply chains. Because at the end of the day, trade integration, supply chain integration translated into very large dividends for advanced economies as well as emerging market developing economies. The hope is that we overcome the pandemic as soon as possible, vaccinate as many people as possible in the shortest time possible, so these supply chain disruptions are going to be under control.
You talked a lot about the gains that we had made in figuring out some of the inequities in this world, but during the pandemic, a lot of those gains and a lot of the progress had been lost. When do you see some of the progress being able to be recouped from some of those pre-pandemic levels when it comes to wealth inequality?
The truth is that this pandemic is all about inequality, however you cut it. When you look at advanced economies versus emerging developing economies, rich versus poorer countries, there is this basically decoupling in per capita income growth rates, especially in lower income countries. When you look at access to education, access to health services, within countries, we see huge differences between those who have the means and those who do not have the means. And of course, when you think about job losses, income losses, they are concentrated in poorer segments of the society, women, those work in informal sectors. So it is going to be difficult to overcome the increase in inequality driven by the pandemic in the short term. That's why we are raising this issue of two-track recovery and the necessity for policymakers at the global level as well as at the national level to be proactive, to work together and not just think about the short-term policy issues, but address the long-term challenges because obviously the pandemic has left deep scars. And as long as those scars are there, we should expect even bigger challenges down the road.